Folks, stop for a second, because if you have been seeing people online saying this stock is about to explode, I need you to hear something different today. Not hype, not a prediction, just data, real numbers, real facts, real picture, because there is a company that some people are calling the next big AI play in the legal technology space, and they are not entirely wrong, but they are not telling you the full story either. And today we are going to go through everything, the good, the bad, the ugly, and at the end I am going to give you my honest take on whether this stock makes sense to look at right now. Stay until the end. Let's start with what this company actually does, because most people throwing around this stock name have no idea what the business even is. This company was founded in 2013. It builds AI-powered legal technology software, specifically electronic discovery. Now, what is electronic discovery? When a company gets sued or is involved in any legal case, lawyers need to go through millions of documents, emails, files, and data to find relevant evidence. That process used to take hundreds of lawyers and months of time. This company built software that uses artificial intelligence to do it faster, much faster. Their platform handles legal hold, document review, case management, all in one place, cloud native, AI-powered, built for law firms, corporate legal departments, and government agencies. That is the product. Now let's talk about where this company has been, because the history here is important, and most people skip it. This company went public in July 2021, at the peak of the tech bubble. The stock opened around $5. Then the hype machine kicked in. By late 2021, the stock was trading above $15. Investors were excited about AI in legal tech. The story was compelling. The growth was real, but the profits were not. And when the broader tech sell-off hit in 2022, this stock got absolutely crushed, down from $15 to $5 to $3, touching lows near $2.45 earlier this year. That is an 80% decline from its peak, 80%. Now here is what the bulls will tell you. They will say the company has been turning around, and they are not lying. Let's look at what has actually been improving. Revenue $156 million in sales, and the company gave full year 2026 guidance of $167 to $177 million. That is growth. Gross margin 74.8%. That is exceptional for a software company. High margins mean the core product is valuable. Q for 2025 earnings beat analyst expectations by 55%. Expected loss of 9 cents per share. Actual loss for cents per share. That is a meaningful beat. Cash position $114 million. Debt to equity just 0.03. Essentially no debt. Current ratio 3.78. Strong liquidity. And something else happened recently that the bulls are pointing to. A director, Robert Goodman, bought over 1 million shares personally on February 27, 2026. With his own money, over 1 million shares. That is not a small bet when a director buys that much stock personally. It tells you something about what they believe is coming. And just this week, the company added a new board member, Toby Williams, joining the board on April 23, 2026. New leadership signals, new board member, major insider buying, and earnings coming May 6th. The bulls will say all of this adds up to a setup, and the analyst targets seem to agree. Needham has a buy rating. With a $10 target, Canaccord has a $6 target, average analyst target around $8. Current price for $13. That is roughly double from where it sits today if analysts are right. Now here is where I have to slow down and show you what the bulls are leaving out, because this is the part that matters. The chart tells a very uncomfortable story. This stock was at $9 just months ago. Today it is at $4.13. That is a 54% decline since its 52-week high. And it is not because the market missed good news. In February 2026, despite beating earnings, the stock dropped 11% in a single session. Why? Because a legal AI startup called Legora entered the market, and investors got scared about competition. New AI competitors are emerging, and this company, despite its head start, is not yet profitable. EPS minus 72 cents trailing 12 months, ROA minus 25%, ROE minus 32%, operating margin minus 30%, profit margin minus 28%. Every profitability metric is negative. The company has been losing money every single year since it went public. 2019, 2020, 2021, 2022, 2023, 2024, 2025. Every year, red and insider selling has been happening too. The general counsel sold shares. The chief HR officer sold shares. While one director was buying, others were selling. That mixed signal is worth paying attention to. Now here is the moment you have been waiting for. Should you buy this stock? Here is the honest answer. This is not a clear buy right now, and here is why. The business is improving, yes. Revenue is growing, yes. Margins are strong, yes. Cash is solid, yes. But the stock has been falling for months despite good news. Competition is increasing. The company is still losing money every quarter, and the chart is in a downtrend. When good earnings cannot move a stock higher, that is a warning sign. Now there is one scenario where this changes, May 6th earnings. If the company delivers strong revenue growth, improved losses, and raises guidance, the stock could move fast. The setup before earnings is interesting. Director bought over 1 million shares. New board member just added. Analyst targets double the current price. That combination right before earnings is worth watching. But watching is different from buying blindly. If you are considering this stock, wait for the earnings report on May 6th. See what the numbers say. See how the stock reacts, and then make a decision based on facts, not hype, because the people telling you this stock is about to explode may be right. Or they may be the same people who told you tech stocks were cheap at $15 in 2021. The data is in front of you now. You decide, hit subscribe, drop a comment. Are you watching Law Before Earnings? We do this every single day. New stocks, honest analysis, same mission. See you tomorrow. And remember, I am not a financial advisor. This is purely educational analysis. Always make your own final decision.